And this is Bloomberg Technology. Coming up, Tesla's tantrum. CEO Elon Musk was blunt with nervous shareholders during a highly unusual earnings call. Plus, New York startups have been catching up to Silicon Valley. We'll take the pulse of the investing climate with a partner at Union Square Ventures. And it is the biggest public offering in years. Chinese smartphone maker Xiaomi files to go public with an eye-popping $100 billion valuation. First, to our lead. Tesla CEO Elon Musk's heated conference call after the company reported earnings Wednesday. Turns out Musk's responses to analyst questions overshadowed the company's results, which beat expectations. But then came what one analyst described as a truly bizarre earnings call, where Musk had a blunt message for investors.
I think that if people are concerned about volatility, they should definitely not buy our stock. I am not here to convince you to buy our stock. Do not buy it if volatility is scary. There you go.
Musk was especially combative with two analysts in this exchange.
Where specifically will you be in terms of capital requirement?
Next. Boring bonehead questions are not cool. Next.
Of the reservations that actually opened and made available to configure, can you let us know what percentage have actually taken the step to configure?
We're going to go to YouTube. Sorry. These questions are so dry. They're killing me.
Investor response was swift. Shares of Tesla fell 5% in Thursday's session, its worst performance in more than a month. Musk has built up a reputation as a showman, ushering in new technology to the masses. But is the tide of public opinion turning? For more, I want to bring in Bloomberg's Dana Hull, who covers Tesla and in New York. We have Romit Shah, analyst at Instinet, who currently has a buy rating on the stock. So truly bizarre, odd, very, very bad. Those are all words that have been used to describe this earning call, Romit, by analysts. How would you describe it?
You know, it's a shame that the call went the way that it did. I thought the results were actually quite positive. I mean, Tesla showed quite a bit of progress on Model 3 production. They showed quite a bit of fiscal discipline. We see CapEx coming in for the year, and they're very close to profitability. And importantly, the company, reiterated that they do not need to raise capital this year. So, unfortunate the way the call went. I think that if it wasn't for that, the stock probably would have been up 5% instead of down 5%.
So, Dana, what do you think was going on here? Fairly promising results, and then he just kind of train wrecks the opportunity to explain them.
Exactly. I mean, the shares were actually up after the earnings hit, but as soon as he cut off the analysts, then it started dropping. And I think it was just sort of a level of dismissiveness of Wall Street that the street was really taken aback by. And then you saw the more he kept talking, the more the shares kept dropping, and then they've dropped further today. And
then you did have some analysts pushing back. Here is an extended version of that quote we brought you earlier on volatility. Take a listen.
I completely understand your frustrations, and I'm frustrated too on how myopic we are right now. They also say that great years are made out of quarters, and great decades are made out of years. So everyone's short-term focused in some ways, and volatility has a way of shaking people out, even that are strong and want to be there. And so,
okay.
And anything you can do to help in the near term on that, I think is helpful for the stock. That's it.
I think that if people are concerned about volatility, they should definitely not buy our stock. I am not here to convince you to buy our stock. Do not buy it if volatility is scary. There you go.
And yet, Romit, you still have a buy rating on the stock. Why?
Well, look, I think that this issue is temporary, and over the next couple of days, we probably won't even be talking about it. And we're optimistic about Tesla. They're growing. This is a multi-billion-dollar company growing at an unprecedented rate, and we see a path to positive cash flow and a valuation that is, would put the stock north of $400 over the next 12 months.
I want to push back on that a little, though, because over the last several weeks, we've been talking about Elon Musk's road tweets, a bad April Fool's joke. You know, minutes before this earnings call about Tesla, he's tweeting about his other company, SpaceX. Do you have any concerns about his state of mind?
I'm not in a position to comment on his state of mind. What I believe is that you know, the number one thing as it relates to this company is production of the Model 3 vehicle. And if you look in the third quarter, they produced 200 vehicles. In the fourth quarter, they produced about 1,500 vehicles. In the first quarter, they produced almost 10,000 vehicles. And this quarter, we believe they'll produce over 30,000 vehicles. So the progress is tremendous. And you know, once they get to around the summer months, we think that they'll be producing, you know, around 5,000 cars per week, and they'll be profitable. And once they get over the hump on production and they turn a profit, I think the conversation is going to completely shift from free cash flow and the balance sheet to market opportunity. And if you look at this company, they're competing in a market that's about 100 million units. And they are just a very small fraction of it today with a tremendous amount of growth. So, you know, we're optimistic about the company's product prospects. We're a big believer in the product. And in the long run, I think Elon Musk is going to be very positive for shareholders.
Dana, are investors worried about this kind of behavior despite the numbers?
Yes. I mean, the shares started dropping once he started talking. I mean, that's phenomenal to me. And the shares were down further today. So I think people are concerned. I mean, whether, you know, he probably said things that every CEO would love to say on an earnings call, but he just sort of broke the norms of convention. And when you are a publicly traded company that goes to the capital markets for fundraising, you don't treat analysts this way. I mean, especially publicly, he was berating them in a way that, I mean, I don't think there's been an earnings call quite this combative in a long time. People are comparing it to Jeffrey Skilling on Enron.
That said, you know, he's still someone who's been glorified and idolized.
And his base loved it.
Is pushing the bounds of technology. But do you think this could fundamentally change his reputation for the longer term? All of this piling up.
I don't know. I mean, I think it's very interesting to me. It's very Trump-esque in that his diehard fans absolutely loved the call. You know, when he says we're going to go to YouTube, he's actually referring to a retail investor who has a YouTube channel, and that person got in 13 questions about product, long-term vision, the product roadmap, technology. They were all actually very good questions. They just weren't financial questions. And you had a lot of people on Twitter today saying, I loved those questions. I wish every call was like this. So to his diehard supporters, what he did, sort of blowing up the conventions of the earnings call, was actually quite popular. So I think it's just going to kind of reinforce the tension between the lovers and the haters, the bears and the bulls, the longs and the shorts. I don't think it's fundamentally going to shift. I just think that people are going to double down on the positions they already have.
So, Romit, you are still bullish, but I want to talk specifically about the production goals set here, which, you know, Tesla and Elon Musk have failed to meet time after time. So do you buy that they can really start producing 5,000 Model 3s a week later this year?
I do. I mean, like I was saying earlier, just look at the progress. In the first quarter, they increased their production by a factor of 4 to 10,000 vehicles. And in April, they were producing over 2,000 cars per week. And so I think there is, you know, a clear path to 5,000.
What are the concerns if you have them? I mean, there's, you know, obviously there are service complaints, there are autopilot issues, there are new models that are, you know, supposed to be unveiled that haven't been yet.
You know, the most important thing about this company is their brand. It's a brand that I think consumers would associate. You know, the only comparable is Apple and the iPhone. And if that brand were to be damaged in any way, then like in the form of a major recall, then I think, you know, that would be my biggest concern. But we really haven't seen that, and hopefully we don't.
And Romit, I just want to close out with you on a conflicting opinion from another analyst, Tony Sacconaghi of Bernstein, who said earlier on Bloomberg Television, there's incremental concern when, on a financial call, the CEO doesn't want to talk about important financial results. The read-through is that potentially the CEO doesn't care or isn't focused on those financial metrics, or ultimately the numbers don't tell a good story. But either of those interpretations, not particularly comforting. How do you respond to that?
I think Tony's, a great analyst, but I disagree with the, with the conclusions. I think you have an executive who's sleep deprived. I mean, he's spending nights in the factory trying to figure out production, and the company has had to deal with an onslaught of negative press surrounding passenger safety and accounting and executive turnover. And, it reached a boiling point. I mean, this was in essence like a Steve Jobs moment. And I wouldn't blow it out of proportion. I think that it's unfortunate that the call went the way it did, but I think this is temporary. And for viewers who who are willing to be somewhat contrarian, I think you look at this, you look at the results, and you look at what the stock did, and what's the opportunity for Tesla over the next couple of years, and I think you'll find that this is a very interesting story, a very interesting stock. You certainly have to be a believer in the product, in the Model 3. If you're not, then you should probably drive one.
And look, there are people who own these cars who absolutely love them. But Dana, there's certainly an argument to be made that if he could keep the executives he had in position to run the production line, he wouldn't be sleep deprived.
Correct. And if he hired a COO or filled out his management ranks, maybe he could get some sleep. I mean, when Tesla just filed their proxy, they only named 4 executive officers. That's a pretty small number for a company that now has 40,000 employees. All right,
Dana Hull, who covers Tesla for Bloomberg Tech, Romit Shah, thank you so much for sharing your contrarian opinion with us.
Thank you.
Now to a company out with earnings earlier, GoPro shares jumping as much as 11% in extended trading. The company posted sales that exceeded analyst estimates. This may suggest the struggling hardware company is still attracting consumers despite growing competition from cheaper alternatives. GoPro shares have plunged about 34% this year. Investors may just be less than impressed with the company's efforts to revive the business. Coming up, Bitcoin rose to a 2-month high off news that Goldman Sachs is moving forward with Bitcoin trading operations. But should crypto bulls curb their enthusiasm? We will discuss next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Twitter is advising all of its users to change their passwords. This after the company found a bug in its systems that exposed passwords in plain text internally. Twitter said it removed the non-encrypted passwords from the system and is working to avoid such an issue from happening again. An internal investigation claims to have found no misuse or breaches as a result of the flaw. Users are also advised to change passwords for other services using the same password. Bitcoin bulls have reasons to be cheerful. The cryptocurrency rose to a 2-month high Thursday amid optimism sparked by news that Goldman Sachs is moving forward with Bitcoin derivative trading operations. But should the Bitcoin bulls curb their enthusiasm? A report by tech advisory and investment firm GP Bullhound warns of a potential 90% correction in crypto assets in the next 12 months. In London, we've got Bloomberg's Caroline Hyde with more. Caroline?
Emily, thank you very much. Yeah, I'm joined by one of a key focus of a company that has been looking at this particular token frenzy report is James Smith. Now, he's co-founder of cryptocurrency intelligence company Elliptic and has read through this report that makes this rather phenomenal statement. GP Bullhound's token frenzy report says that 90% correction, flushing out most of the companies. Do you agree?
I don't think I agree. There have been a lot of different predictions, and somebody's going to be right, as always with markets. What we saw at the beginning of this year was a big correction from the highs that crypto hit towards the end of 2017, with probably something like a 75% correction at that point. And And that follows a pattern that's occurred multiple times through the history of Bitcoin. In these periods after a crash, we often see some consolidation, and it's a great rebuilding period for the industry. So there may be further correction to occur, but I would be doubtful that we'll see a 90% hit again from this point.
So correction aside, we're still seeing money coming into the area, whether it be through ICOs, initial coin offerings, or indeed through VC money getting into blockchain companies. And interestingly, here in Europe, actually, VC funding has been building up at quite a rapid rate, about 75% over the last couple of years. Are you noticing the difference here in Europe, that it's growing at a faster pace for money coming into the sector?
Yeah, it's definitely grown over the past few years. So we've been running Elliptic now for nearly 5 years, and the ease with which you get into conversations with VCs about investment now is totally different from how it was 5 years ago. I think one of the big factors in that is that there are some real hubs of activity around crypto in Europe, particularly in Switzerland, where a lot of early crypto community is based, and then lots of spin-outs have occurred from there.
Crypto Valley, as it's called.
Crypto Valley, exactly, where lots of early core developers have come up with ideas and built and funded businesses around that.
Zug, Berlin, London. You're about to go raising more money at some point. Are you looking towards the US or Europe in terms of VC funding, or are you looking to your own ICO? What do you think will last in terms of the way you raise money when you're based inside the blockchain industry?
So we've always taken the approach of using the traditional route of VC funding. Like probably any business out there, we've thought about the possibility of an ICO, but for us, it's always been really helpful to work with VCs. It's been helpful to get both the advice, but also the carrot and the stick that you get from VC. Mm-hmm. One of the problems I see with the way many ICOs have worked is lots of money has been put in to the point where there often isn't direction and there often isn't any stick. And that's how you can see money being wasted in many ways, not even thinking about the many issues that some of them will have with the SEC.
I mean, the role of Elliptic is, as it's called, a cryptocurrency intelligence company. You're basically weeding out bad actions, bad actors. You're working within banks and institutions. Are you seeing more people knocking on your door saying, I want to get into the world of blockchain, whether it be private or public, can help me?
Yeah, so we detect and prevent criminal activity in cryptocurrency. We do that because we want to help grow the industry. We're really positive about the future of cryptocurrency. We think one of the key building blocks that's required if the industry is going to reach its potential is an ability to distinguish between criminal activity and legitimate activity. And there certainly is criminal activity out there in many forms.
As much as everyone speculates?
How much are you speculating?
Well, for many, it feels that it was born out of the Silk Road.
Yeah, so actually that's why we first started doing this in the first place. Is in 5 years ago, all anyone talked about, all that hit the media was Silk Road, drugs, guns, but that's only a very small part of the story. The vast majority of crypto activity is perfectly legitimate. A lot of it these days is around speculation. Mm-hmm. But there is some activity that is either dark web or fraud or money laundering. And we see it as important to be able to detect that and help the businesses who are trying to perform legitimate activity in the space to grow without having that risk.
At the moment, funding is more in the US for cryptocurrency, blockchain-based companies versus Europe and Asia. Will that remain the case, do you think, or do you think Europe and Asia will become as sizable?
There's been a lot of growth, obviously, in Europe and in Asia. The US has a lot of money to invest in technology, and I don't see that reversing anytime soon. But I do think that Asia in particular is becoming a really dominant region for cryptocurrency. We're seeing a lot more clients and new leads come in that area.
We'll see you expand in Asia. James, it's been wonderful having you on. Thank you very much indeed. That was James Smith, CEO of Elliptic. Emily, discussing this new report from GP Bullhound, the token frenzy. Will that 90% crash be a coming?
All right, Caroline Hyde for us in London. Thank you so much, Caroline. Well, shares of Spotify turned in their worst performance since becoming a publicly traded company last month. Why some investors are turning on the music streaming giant next. This is Bloomberg. Spotify suffered its worst stock decline since becoming a public company. Investors were not impressed with a 45% jump in subscriptions last quarter, even though it matched Spotify's earlier projections. There had been a lot of bullish sentiment on the stock the last few weeks, rising nearly 30% over the last few months. Instagram has added a native payments feature for some users that allows people to shop without leaving the app. This according to a TechCrunch report citing user reports and a company spokesperson. The feature lets users register debit or credit cards as part of a profile set up by a security PIN to make purchases. It's now live for a limited set of partners. Goldman Sachs and Comcast are among the backers of wedding planning startup Zola. The company allows couples to swap out unwanted gifts from their registry before they're delivered, avoiding the hassle and cost of returns. Zola has raised $100 million so far, roughly valuing the company at $600 million. And coming up, we talk about the New York tech scene with one of the biggest VCs based there. Rebecca Caden of Union Square Ventures is with us here in San Francisco. That is next. And Bloomberg Tech is live streaming on Twitter. You can check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Here's a check of first word news. The head of Spain's Basque regional government says ETA, quote, has stopped disturbing us forever. Inigo Urkullu's comments came a day after ETA had said in an open letter to the Basque people that its journey and political activities had ended. ETA killed more than 850 people in its 6 decades of existence. European Commission President Jean-Claude Juncker is appealing to Belgium to grant nationality to British staff ahead of Brexit. More than 900 British citizens work at the Commission. Some have lived in Belgium for years and have European pension plans. A reunified Cyprus may not become a reality. That's according to a Turkish foreign ministry official who suggested today alternatives should be considered to resolve the island's decades-long ethnic division. His remarks could signal a major shift from long-established parameters that have guided negotiations for 4 decades. Italy's President Sergio Mattarella has summoned the country's feuding political leaders to a single day of talks on Monday to seek a way out of a 2-month impasse. That's after 5 rounds of talks between the populist Five Star Movement and the center-left Democratic Party yielded no prospects for a government majority. Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. It's just after 5:30 p.m. here in New York, 7:30 Friday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, an afternoon rally in the US kind of petered out, really, and most of the major indexes ending a little lower. The S&P down a bit more than 2/3%. The Dow kind of flat. The Nasdaq also off about a 1/5 of 1% there. Here in this part of the world, we got ASX futures pointing higher despite that weak lead from Wall Street, up about 0.2%. Nikkei futures traded out of Chicago a little weaker, although Japan is closed again today. And we have the Aussie dollar pushing back above 75 cents US. This is after getting a boost from strong March trade numbers, but the US dollar also weakening against most G10 currencies. A quick look at commodities. We've got oil higher again, back above $68. Gold also gaining. We're waiting, of course, on the US jobs reports and a number of other things to look out for as well. We got the US trade talks continuing in China. China services PMI a little later on, and also, of course, Alibaba earnings going to be out before the reopen in the US. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Union Square Ventures has invested in some of the hottest names in tech, from Twitter to Etsy, and is betting big on new technology like cryptocurrency. They're a backer of Coinbase. My next guest joined the firm late last year, becoming its first female partner. Rebecca Caden, partner at Union Square Ventures, is with us here in San Francisco. So, USV based in New York, you're going to move there.
Yes.
You came from Maveron, which is based in Seattle. You invested in Allbirds, Dia, Periscope. What's the transition been like thus far?
From Maveron to USV? It's been really awesome and exciting. I think the interesting thing about venture is all these firms are as a pool of capital, and that's a commodity and a collection of people, and being with super smart people who are going to dig into it and talk about the kind of messy stuff of early companies and trends is exciting, and that's what happens at USV.
And you hit the ground running. You've already made some investments, right?
Yeah, I've made 3 investments so far, staying in the kind of consumer world so far that I focused on at Maveron. So we're hitting it running.
So when you look at the broader landscape, where do you see opportunities? Like, what's overvalued, what's overhyped, what's underhyped?
Yeah, I mean, I think that you can look at that in a couple ways. I think there are hype cycles all the time, right? And so the AI and ML leads to crypto, and by the time you're in the hype cycle, you're chasing, right? The kind of core of it has already been evolved, and you're chasing the thing that's next. I think one of the great things about USV that I've really enjoyed is we're very, very thesis driven. And so we try to block out those hype cycles a little bit and think about what are a couple things we can believe. What can we make bets behind?
So what do you believe?
So we're really focused right now on a couple of things. One is really broadening access to new markets. We think a lot of tech has focused on really the top of the pyramid and those early adopters, which makes a lot of sense. But we think now that a lot of these platforms and protocols are created, it might be the right time to leverage them to really hit the broader markets. And we're doing that really across categories: financial services, consumer health, big buckets of spend marked by old school brands where news stories are resonating with users and can hit that kind of mass market.
So cryptocurrency, you guys back Coinbase, Polychain Capital. I know Fred Wilson is really excited about it. You know, we just read a story about someone predicting a 90% correction in cryptocurrency. Also, regulation could be coming. Are you concerned?
So I think, you know, the USV thesis on crypto really stems from a belief in decentralization. And crypto is really the first byproduct of that. This idea that massive platforms, the Facebook and the Googles and the Amazons, which have on one end done a lot of good for consumers and on another aggregated the web in a significant way, has created a need for a decentralized internet. And blockchain is really the first technology behind that, and crypto the first example of that. Our thesis is around the decentralization. We believe very much that crypto is going to rise and fall and take a while to kind of even itself out. And until there are significant consumer use cases, it's a very volatile asset. So we're less concerned because we see that in the short term, and we're believers in decentralization in the longer term.
So you studied English, you got an MBA, you started your career as a journalist.
Yes.
And yet you have so many traditional venture capital firms saying you need to have a STEM background to do this job, and therefore they can't find any women. What's your response to that?
Well, my response to you can't find any women is to email me and email the women venture capitalists right now who are committed to changing that. I think there are fantastic candidates out there, and the story of venture, one of the things that makes it such an exciting industry, much like entrepreneurship, is there isn't a single path. There is no story that guarantees success.
So you don't need a STEM degree?
No. I mean, look at some of the best VCs of all time, the people that we admire today. You know, Fred is on that list, but so is Mike Moritz, who is a journalist, and Bill Gurley.
And since you mentioned Mike Moritz, I gotta say, you know, he is one of the people who said to me, you know, we're looking hard, but not enough women are studying STEM, and we're not prepared to lower our standards.
I do remember that happening. But I think that's a myth around this industry, because you look at what's created. What a great thing about venture is there are factual returns, and there are people that create them and firms that create them. This isn't that fuzzy when you are willing to take a long enough cycle, and you look at the creators of that, and people who come from STEM is a part, but it's certainly not the whole.
So is it an excuse? Are people not looking hard enough?
It's total excuse, yeah. And you know, I think on one hand, people aren't looking hard enough, and on another, awesome things are happening. And people who may have said that before are starting to email us and reach out to the world and really make hires that are going to make this change. So I'm actually, it's not going to happen tomorrow, but I'm optimistic on where it's going.
And it's not just about hiring, it's about creating an environment where people of different backgrounds can be equal stakeholders, right? And I'm curious, what's the transition been like for you at USV, joining an all-male firm that is very tight-knit?
Yeah, well, you know, I spent a lot of time with my partners before I joined, partly for that reason, and I think they did the same with me. These firms are small, they're familial, they're based on trust. You have to trust each other's decisions, and having that buy-in is essential, and it doesn't happen overnight. And so for me, the transition has been quite smooth, but I credit that to two things. One, the time we spent together before, and two, they were open to it. They wanted it. New ideas weren't scary, they were exciting. And the idea that I was different was an asset, not a problem. And I think that's what creates success. And firms that don't have that aren't going to find success in hiring people that aren't like themselves.
I want to talk to you about All Raise, this new nonprofit that you are part of, which is working to increase the number of females getting funded and women in venture capital. You know, some men have said to me, can we really change things if we're not working together? And men have felt left out.
Yes, which is ironic and great in some ways, and also something we need to confront. We actually agree. And so the story of All Raise is trying to do a lot quickly. And where we started was a group of very devoted female venture capitalists who really already knew each other and said, hey, we're already friends. Hey, we're already helping each other. How do we help this industry too? And it's kind of spiraled from there in a really exciting way. And it's a community that I am proud to be a part of, not only for what we're doing, but they've been instrumental to my career. We agree that this is a goal that needs to be industry-wide and not female venture-wide, and one of our initiatives is specifically around that. So we've started to reach out to male VCs and kind of invite them into the fold and really go to them and say, how can you help, right? Where is this intersection? And it's been really exciting to hear the response. So we're on the same page and more coming soon on that.
Okay, so you're getting ready to move to New York. You know, we always talk about New York versus Silicon Valley, and I know New York has a great tech scene, lots of up-and-comers, but still not having that $10 billion tech company. When is that going to happen?
You know, I think we're marching in that direction. I think we have signals along the way that are exciting, but what we need in New York, it's exactly what you said. New York is an awesome breeding ground for new businesses right now. Even today with the Zola announcing of $100 million financing behind a consumer company. That doesn't happen every day in New York, and it's really exciting. But we need the behemoths. We need the pillars that Silicon Valley is really based on, and we need the talent there to build those and the risk tolerance to go for it and not to take the early exits, even when early exits can be gigantic. And I think that's just taken time. But as you know, the MongoDBs and the Twilios lead to the next generation, and I think we're going to see that in the next kind of 3 years.
Okay. So speaking of behemoths, SoftBank has almost $100 billion to invest, and that's competing with your money. I mean, I know you guys are earlier stage, but it is shaking up the system a little bit. And so how does that change the competitive landscape for you? Have you had conversations internally about, what's our edge? How are we going to compete with this amount of money?
Yes, I do think that that's more competitive at a later stage point than an earlier stage point from how they've gotten into deals so far. I think it's significantly changed the growth landscape and how the growth investors look at it. At USV, we're early stage investors. And what we find is a couple of things. One, it's extremely relationship driven. That starting business is emotional as much as it is tactical, and the connection with an entrepreneur who believes that you believe in them and are going to be partners from very early days, and you show conviction quickly and with depth and confidence matters. And we think we can do that. I also think the thesis-driven nature of the firm makes it when we believe in something, we have conviction really quickly, and we can dig into that with an entrepreneur because we've been thinking of these topics too. And so where there's that intersection between new company creation and our thesis, we find it to be a powerful interaction. So I would say SoftBank definitely has a big implication on our general ecosystem. On the early stage, at least not yet.
All right, Rebecca Caden, partner at Union Square Ventures. We'll be watching to see the moves you make.
Thank you.
Thank you so much
for having me.
For stopping by. Coming up, powering the streaming world, how Akamai is ensuring that you get your online content and how it's keeping hackers at bay. That is next. This is Bloomberg. SoundHound, an innovator in voice-enabled AI, raised $100 million in funding to compete with the likes of Google and Amazon. Backers include NVIDIA, Samsung, Catalyst, Nomura. SoundHound plans to use the funds for its voice-enabled AI platform Houndify to be a third-party option to Google Assistant and Amazon Alexa. Houndify lets developers and companies deploy anywhere while maintaining control of their content and their users. Well, when it comes to streaming, video, music, games, and more, Akamai Technologies finds itself a critical component. The company announced its first quarter results Monday, which beat on revenue and earnings per share. Stock is trading higher since then. Akamai CEO Tom Leighton spoke to Bloomberg's Alex Steele and David Weston about streaming and the online security services the company provides.
Security is not something a lot of people see. They see the sporting events online and the videos we do, and they think of Akamai that way. But security now is almost a quarter of our revenue, and when it's growing at 36% year over year, with keeps that up in a few years, it'll be a bigger business maybe than even media.
So your margins have been pretty robust on the media side.
Yeah.
How do they compare with the margins on the security side?
I think in the long run, security margins are even higher. Media, there's a lot of cost to serve all those videos. With security, it's a different kind of setup. It's filtering out the bad traffic, stopping the attacks. Really exciting technology we deployed now to stop account takeovers. I was speaking with an exec of one of the world's largest banks a couple weeks ago, and they used to lose 8,000 accounts a month because the bad guys took them over and took the money away with fraud. They're down to 1 or 2. Because of the new technology.
1 or 2,000 or 1 or 2?
1 or 2. Basically eliminated the account takeover that was happening online.
Wow, that's stunning. On the media side, as you look forward to growth there, is that because the overall size is growing of streaming, or how much of it is market share? Where are you in market share? Are you gaining or losing?
We're gaining market share. Our traffic is growing at a rate much higher than the market. More people are watching online. That helps. And also people are watching at higher quality levels. You don't think about it, but as you get a better quality picture, that takes a lot more bits per second traffic to produce that picture.
Let's take a macro view, because it's Jobs Day tomorrow. How many people do you expect to hire this year?
Akamai is growing. We have over 7,000 people, and I think you could expect to see us grow by several hundred more this year. So we continuing as a growth company.
Do you have to pay up for those workers?
Oh, sure. No, you gotta pay, and we're after the.
But what I'm trying to get at is how hard it is to find those few hundred workers, and you have to pay up more than you would have to do it.
We're very fortunate in that we really are after the smartest people out there, and because of our employee base, they tend to attract those people. We're doing very cool stuff. We are delivering most of the media you see online. We are defending the world's major banks and commerce companies against takeover and fraud. We're making the apps you use fast. We're doing cool stuff, and that helps us attract the best talent.
So how many of those people are going to be programmers as a practical matter, or scientists of some sort?
Yeah, the majority of the company is technically oriented. So there's the development, there's the technical support for our customers. Staying ahead of all the attacks and everything that's going on in technology requires a very strong technical workforce.
Can you find enough people here in the United States, or are you one of the technology companies that really needs to have some immigration, some people come over?
I think immigration is important for the country. We are able to attract the talent we need, and also we hire overseas. We run a global business, so we hire people that are smart in technology all around the globe.
That was Akamai CEO Tom Leighton there speaking earlier on Bloomberg Television. And a reminder, the week of May 14th, we're going to be broadcasting Bloomberg Tech Live from Boston. Join us as we showcase the innovation, diversity, and power of Boston's regional tech economy. Still ahead, how Xiaomi went from has-been to world's biggest IPO in years, potentially. This is Bloomberg. Pentagon has banned smartphones made by 2 Chinese companies from being sold on U.S. military exchanges around the world. The Defense Department says that those phones and related products from ZTE and Huawei pose a security risk to military personnel and operations. It declined to specify what the risks are. Huawei responded saying it remains committed to openness and transparency in everything we do, and we want to be clear that no government has ever asked us to compromise the security or integrity of any kind of our networks or devices. ZTE has yet to respond. Sticking with Chinese smartphone maker, Xiaomi has filed for an initial public offering in Hong Kong, kicking off a process that's expected to raise at least $10 billion US. The IPO could be the largest since Alibaba in 2014. The Chinese smartphone maker said revenue surged 67.5% last year, a blistering pace of growth that will help it take on Apple and Samsung. I want to head to Hong Kong now and Bloomberg's chief North Asia correspondent, Stephen Engel. So, Stephen, you know, Lei Jun, the founder of Xiaomi, was once hailed as the next Steve Jobs, and then things went south. What is driving this turnaround?
Yeah, I mean, Xiaomi was an incredible success story when it was founded in 2010. I remember first interviewing Bin Lin, the co-founder, and also Lei Jun back in 2012, one of the first foreign journalists to get an inside look at this booming company. We had no idea it was going to become this large, and they really were kind of a victim of their own success. Lei Jun became kind of a rock star, as you said, being compared to Steve Jobs in China. Actually, he said he didn't like to be compared to Steve Jobs. He said he was more like Jeff Bezos. Anyway, they had an over-aggressive expansion plan. And, you know, of course, as you know, they hired Hugo Barra away from Google. They really expanded very fast. But then some other cheaper competitors came along, kind of stealing their business model of online distributing the handsets. And they lost their way a little bit. The growth went down into the single digits. But Lei Jun has really turned things around ahead of this IPO now, which could be listed here in Hong Kong by June. He spread out to India. I think they're the #2 Indian handset vendor right now, and they went upper end as well, recapturing some of that blistering growth that they saw in the early days.
How does this set up the Hong Kong market to challenge New York as IPO king or queen?
Yeah, that's right, because, of course, Hong Kong did not allow dual-class share structure, which would allow the founders like Lei Jun, despite having a minority shareholding, they would still maintain control. Well, Hong Kong has changed those laws to capture what has been, of course, a hugely successful run of Chinese technology companies coming to market. But like Alibaba, as you mentioned, in 2014, taking their $25 billion IPO to New York because Jack Ma could keep control with the dual-class shares allowed in New York. But in Hong Kong, they didn't allow that. They didn't want to have those violations, or they saw the violations of corporate governance and transparency. But they have changed the laws. A bit controversial here because of Beijing's, the thought that Beijing was exerting more control. But Lei Jun and Xiaomi saw this as an opportunity to come here, maintain control of the company. And others are lining up as well. Didi Chuxing, the ride-sharing company, as well as Ant Financial of Alibaba, are looking to go IPO possibly this year in Hong Kong.
Big question looming whether this company can really convince U.S. carriers to sell their phones in the United States and, not only challenge companies like Apple and Samsung globally, but in this market. What's the read on that?
Yeah, I mean, that's going to be a tough one as well because, of course, we've been reading all these stories about the blocking of other network equipment makers, whether it's ZTE or Huawei in the United States. Xiaomi is going to use the proceeds of this IPO to look at international expansion. They have gone, as I said, successfully into India as the #2 vendor there. The United States would obviously be a stated goal, but it will be a tough nut to crack, obviously.
All right, Bloomberg's chief North Asia correspondent, Stephen Engel. As always, Stephen, thank you so much for joining us. And that does it for this edition of Bloomberg Technology. Friday, we're going to be covering earnings from another Chinese tech giant, and that is Alibaba. Results on tap. A reminder, we are live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.